So as I was just saying, the whole thing that we have created, or at least the central banks have created, is something that a lot of people who are smart are worried about, and how it creates a problem. And Jamie Dimon of JP Morgan said that the last year that the October flash crash in the bonds was a warning shot that the bonds were a problem. And so far the bonds have been a problem to the downside. So the world's empire has been built on cheap interest rates, and basically some people are arguing that the credit cycle continues on, and that they're not lending enough money to enough people who can get themselves into trouble, full stop, your line. However, what they are is they're actually lending to people for superannuation purposes. So SMSFs can buy property, usually a 2-bedroom unit, to rent out. And they borrow money in their self-managed super funds. Full stop. Now, as people get older, I would imagine most people with decent enough self-managed super fund to support that borrowing would be in their 50s. As people get older, then they start to need to reduce the assets as they retire and live off the proceeds, full stop, your line. What is now happening in the eastern suburbs of Sydney is that when you walk into a property that is for rent, they tell you we've just had a price decrease, full stop. Usually these properties are empty. I know because I'm looking for something for my boys to live in right now that I would like to rent out. Full stop, new line. I have not seen this before. Empty rental properties in the eastern suburbs of Sydney where the agent tells you the price is lower than what is advertised. Full stop, new line. I would say this would be start of something significant, and falling rents do not help tenants. Landlords, I mean, in terms of giving them a return. So if you've paid $800,000 for a 2-bedroom little shitbox in, say, Rose Bay, with no views and crazy neighbours, and you are getting $600 a week, then you are behind the 8 ball big time. Full stop, your line. That is something that cannot be sustained. So rents have to go up, and at the moment there are no tenants because they're losing the backpackers. The tourists are not coming anymore. The beaches are empty in the eastern suburbs. Now this may be a phenomenon just in the eastern suburbs of Sydney, but we're also seeing it in Perth and the Gold Coast, where I have been recently, where there are a lot of vacant properties for rent and for sale. Full stop, your line. This is the sign of a recession. And it's not just in Perth where you would expect it to be. It's not just in the Gold Coast. It's coming to Sydney, the main driver of the property market. Full stop, my line. With higher interest rates longer term, it will be harder for landlords to sustain owning a property that is empty. Full stop, your line. That will force properties down. And if the Chinese are not there, there is a big vacuum back down to where the reality of property prices are in Sydney and probably Melbourne. Full stop, your line. Dow Jones Industrial Average. Oh. Dow Jones Transportation Average. We see the Dow Transports didn't really have a successful close. Comma, and it's wafting around. It's showing no real signs that it's going anywhere up or down fast. The sign of a down move is below 8,600. The sign of an up move is above 88.50. Full stop, new line. Dow Jones Industrial Average, new line. We have a struggle street pattern. We have a target at 18,396. Full stop, new line. Yes, it made a new high, but the pattern is struggling. Full stop, new line. We are sellers in a large way on a break back down below 18,200. Full stop, new line. Now, it needs to break back or hitting the target and then breaking back. Full stop, new line. This is a fifth of the fifth, and it's a fragile pattern, and it's a reversal pattern with the struggle street. Full stop, new line. Struggle street patterns are very profitable and very fast, as we know. Full stop, new line. They don't always happen, so don't get too excited about it, but it's there, and it's something we are stalking now. Full stop, new line. S&P 500 cash index, new line. We see the S&P 500, and I repeat, the breakback point is at 2110, just to give it a bit of space. Full stop, new line. And there is still a possibility of 2148 as a target area. Full stop, new line. NASDAQ, new line. One of these things is different from the other. Full stop, new line. Do you remember that old Sesame Street song? Question mark. In any event, the NASDAQ, which has been the strongest, is not really performing all that well, and it's rising on falling volume. So warning bells really go off down below 44.33. Full stop, new line. Volatility index, the VIX, new line. Nothing really doing other than the unusual thing is if the market is going to new highs in the S&P and the Dow, why is the volatility index not below 12? Question mark. Now, my answer to that is I don't know why it's not, but I don't think that it should be doing this if the world thinks that volatility is going to be less and the stock market is going to be higher. Full stop, new line. So we need to watch and wait and see to see if it can break above 13.53, full stop, new line, and to see whether the forces of evil that have made the stock market in a place where it shouldn't be at this point in the cycle can be overcome by the forces of good, where we should put it back down to where it's actually good value. Full stop, new line. VXX.ETF, new line. We are still waiting patiently for our target area on the VXX.ETF, full stop, new line. And we will leave our breakback trade where it is, and we will leave our orders where they are, full stop, new line. E-mini S&P, new line. We were stopped out yesterday if you hadn't already got out. And that's usually the time where it likes to turn around and go back down. So this is a point below 2110 where I would say it's all over. We have the end of the fifth wave up there, or visitation rights are still at 2148 and 2176. BHP.US, new line. You can excuse BHP.US for the fall of the day before due to South 32. You cannot excuse BHP.US for the fall of last night. Full stop. It is bad, and 43.31 would be the next target. $43.31 is the next target. Full stop, new line. BHP is not a happy chappy. And I suspect that also will transfer to BHP.ASX. Full stop, new line. It's not hard to predict that one, I guess. Full stop, new line. The problem is the iron ore producers said that they were going to stop producing iron, and then they started producing more iron, or started to say they're producing more iron ore, full stop, new line. So obviously there is more supply out in the world, full stop, new line. And yet the iron ore price has not fallen out of bed, full stop, new line. GDX.ETF, new line. The gold market vectors is not doing what the gold bugs would like, full stop, new line. On the weekend, I listened to a gentleman who is from a bullion company talk about why gold has to go higher. And I know that he's been saying that ever since it was $400 higher. Full stop, new line. That's because he is from a gold bullion company. He had a crazy hairdo, but spoke very well. And he attracts lots of crowds. Something I do not seem to do because I'm a little bit more reserved, I guess. Full stop in line. Now, what he said was the world's really fucked. Everyone's borrowed all this money and the governments have done the wrong thing. Similar to what I'm saying, but he thinks gold is going to go up when nobody has any money. Full stop. And I question that logic. I think gold goes down when nobody has any money because nobody has any money to buy gold. Full stop, new line. So let's see what gold did overnight. And gold seemed to have disturbed itself enough, formed a little struggle street pattern and collapsed. It rose on falling volume. Full stop, new line. I still do not like gold. Full stop, new line. That doesn't mean gold's going to fall over now, but it has a higher risk because it's taken out everybody who was short above here and probably put a few people long looking for $1,244. Full stop, new line. I still do not like gold. Full stop, new line. German DAX, new line. German DAX doing a bit better yesterday. That's nice. I'm sure I saw a headline saying that they will continue to buy more bonds that there are not many bonds of and force interest rates down so that you're lending to Spain at 0% or minus 5% or whatever stupid number there is. Full stop, new line. Usually people who need stability buy bonds, stability of income. Full stop, new line. What central banks are doing is removing all of the supply of bonds in the world and putting them back into their own coffers. Full stop, new line. So it's just the same as what we saw in the US. Full stop, new line. The target is 11,923. Full stop, new line. I have a funny suspicion that the Australian government will start doing this bullshit just because they have a severe habit of copying each other, the central banks around the world. If we get more of a stock market fall, the Reserve Bank may start to do its own QE. Full stop, new line. Look out for that stupidity. Full stop, new line. Now, the German DAX, it's coming back into a testing point above, say, 12,000. I think that's a very good reason for it to go higher. Full stop, new line. If you decided to go long, you would be forgiven for having a stop below 11,600. Full stop, new line. Yes, it's a wide stop. Full stop, new line. Euro Stoxx 50, new line. I find it interesting to see that the Euro Stoxx did not go for a row, but I am missing some data, so it's an irrelevant thing. This is the futures contract, not the index. Full stop, new line. The Euro Stoxx 50 also went for a row. It has confirmed that this is a fourth wave of some sort. It should be making new highs. It's okay to buy. Your stop loss is at 35.66. Your first hope is at 37.01, and you'd buy more on a break above 37.24. Full stop, new line. Some insanely nonsensical targets exist on the dailies. But the best target would be 40.87 to 40.64 on this run, full stop, new line. You'll notice that we have to make a PHG trade. And we'll buy 1/3. So we'll buy 1/3 market on open. Shit. The 1/3 market on open with this, and 1/3 on dips to 36.50, and then 1/3 on a break above 37.24. Stop loss will be 3600 and target 40.70. So unfortunately, you might have heard my pain, but this is what it looks like. I'll try and fix that up later. I don't want to bore you with that that thing. And I don't know why this is missing either. And this is the DRYS. And that was bought a long time ago. And this is all getting a bit messy here. So if Europe's back in play as the flavor of the day, then we would expect the US to not get as much attention. Full stop, new line. UK FTSE, new line. The UK FTSE is 71.67. A break above 70.33 is a positive movement, full stop, new line. And we do not seem to have the data for the FTSE on the board, so it's probably already broken up. And the data that I've just got in says it's not broken up. So who knows what lurks in the minds of such animals. Full stop, new line. Anyway, this probably will play catch up towards 7100, full stop, new line. Italian MIB, new line. One day it looks terrible, the next day it looks wonderful. Target towards 24,517. If you really want to buy it, it's probably now best bought on a break above 23,864 with a stop loss below 23,210, and it probably will benefit from Europe being a little bit more excitable. Full stop, new line. Shanghai A shares index, new line. Just when you thought it was safe to think that the Chinese market had the potential for falling over, it booms again. If you feel like being long this, your stop is below 44.88 and your target is short-term 47.93, full stop, new line. Once it gets started sort of above here at 46.50, it starts to look more like it's just going up again, big time, full stop, new line. You might want to wait for a close above there. But if you got out, you might want to get your exposure back onto China again, full stop, new line. Japanese Nikkei, new line. Failed to go down, so now targeting 20,582. It's popped its head above 20,000 again and probably has more potential for higher. And I would suspect the Japanese government has probably said maybe we need to do more QE, full stop, new line. If you are long, stop is at 19,689, full stop, new line. Hong Kong Hang Seng, new line. The Hang Seng is a little bit curious, but it probably will mimic its cousin across the border or across the causeway. 27,865 would be a break up. You would buy that there with a stop loss below 27,459, targeting 28,819. Full stop, new line. Now we turn to the only market that is actually behaving according with the stock market songbook. That we used to have, full stop, new line. This is the Australian SPY. It's normally a time where the market's going to either congestion or back off a bit in equities for the next couple of weeks, full stop, new line. The Australian stock market seems to be one of the very few that is doing that, full stop, new line. Australian share price index futures, new line. The curious thing about this chart is that it's a bit different to the XJO. The XJO seems to be making new lows, whereas the SPY is not, full stop, new line. The ultimate target area, if this is to continue, is either 55.54 or 54.54 or 53.84, full stop, new line. You will notice that the Australian market is weaker than the rest, full stop, new line. And it's the bank's fault, full stop, new line. Today it may well be BHP's fault, full stop, new line. Let's go and play in the Australian room, and I really am looking forward to the day where we are not moving between rooms but just using the same one, and I'm trying to work out how to do that properly, but I know it's annoying to have to re-register for some. Unfortunately, it got created that way. Originally, it was just one room, everyone in, and people could come in for the times that they wanted. And I really think we have to return to that quickly, because it blows my brains up, and it probably blows your brains up as well. So in the middle of the night, I have to sit there and create those things. Okay, Mark's saying 55.54 would be a double bottom on the 50% retracement. That would be true. What we'd have to think about in the SPY is a break up above 56.96. Okay, so let's go rocking down into Australian Avenue.